This video is a summary of the Catalyst Pharmaceuticals CPRX sensitivity and risk analysis. If you want to perform your own due diligence, a link to the original research is provided below. Now let's get started. Catalyst Pharmaceuticals is a biopharmaceutical company focused on the development and commercialization of therapies for rare disorders. In this analysis, we will examine the key factors that could cause the stock price to decline and the potential magnitude of those declines. In the most recent quarter, the company reported a 43% year-over-year increase in revenues, which is an acceleration from the 28% growth rate observed in the previous quarter. This growth was primarily driven by the sales of their products, Firdapse, Fycompa, and the newly launched Agamree. However, despite this positive news, the stock price declined by 8% following the Q1 2025 earnings release. This negative market reaction suggests that investors are concerned about the sustainability of this growth and what it means for the company's future prospects. The current consensus estimates for CPRX are for revenues of around $550 million for 2025, representing a growth rate of approximately 29%. This growth rate is lower than the 43% reported in the latest quarter, indicating that analysts are expecting a slowdown in revenue growth going forward. One key risk factor to consider is revenue growth sensitivity. There are two possible scenarios. In the first scenario, if the revenue growth rate remains at or above 43%, then the company is on track to meet its upper-end 2025 guidance of $565 million. In this case, the stock price could appreciate as the positive earnings surprise drives investor optimism. On the other hand, if the growth rate slows down to the previously mentioned 28%, then the stock price could decline by 5 to 10% as the market adjusts to the lower growth expectations. Another risk factor to consider is product performance. Agamree has the potential for strong growth, but as it matures, it may face challenges such as pricing pressure or competition that could result in slower growth rates. If the growth from Agamree fails to materialize as expected, the stock could decline by 5 to 8%. Additionally, if the company continues to rely heavily on Firdapse and Fycompa, which are nearing maturity, this could limit the company's long-term growth potential and negatively impact the stock price. Furthermore, market reaction is a crucial factor. If investors are left disappointed by an earnings miss, or if the company fails to provide adequate guidance, this could lead to a sell-off and a stock price decline of 8 to 12%. Lastly, the 2025 revenue guidance of $545 to $565 million is a crucial point of reference. If CPRX fails to meet these projections, it would signal that the company is experiencing lower than expected growth, and the stock price could decline by 8 to 12% as a result. In conclusion, CPRX has a moderate to high risk profile primarily driven by the sustainability of revenue growth, market sentiment, and the potential challenges associated with Agamree's long-term success. Investors should closely monitor these factors as well as the company's guidance to assess the risk of a stock decline. If you enjoyed this video, please leave a like and subscribe for more content. Remember to always do your research before making any investment decisions. Take care and see you in the next video.